Hi, I'm Agnes, and today we'll dive into NFOs or new fund offers. Recently, many mutual funds have been launching NFOs as market hit new highs and individual investors grow increasingly interested. Mutual funds are capitalizing on this enthusiasm by introducing NFOs to attract new investments. But what exactly is an NFO? How does it work? Is it like an IPO? What are the advantages and disadvantages of investing in NFOs? This video will cover all these questions in detail. Before we begin, make sure to like this video and subscribe if you find the information useful. Let's get started. NFO stands for New Fund Offer, where a mutual fund offers units to the public for the first time. These units are priced at rupees 10 each during the subscription period. Like an IPO, the goal of an NFO is to raise capital and attract new investors. However, the minimum investment for an NFO is usually rupees 5,000 compared to 15,000 for IPOs. Once the targeted funds are raised, the mutual fund invests the capital in securities. If target is not met, the NFO is withdrawn and the investor's money is returned. NFOs offer a unique way to diversify portfolios. Close-ended funds. Close-ended funds have a fixed corpus raised during the NFO subscription period. Once the subscription closes, no additional investments can be made. These funds usually have a maturity period of 3 to 5 years. While these funds are tradable on exchanges, their liquidity is limited, making them less flexible. Open-ended funds. Open-ended funds are more flexible, allowing investments and withdrawals at any time. They don't have a maturity period and their liquidity is much higher than closed-ended funds. Most NFOs launched by mutual funds fall under this category, making them more accessible to individual investors looking for flexibility in their investments. NFOs and IPOs share similarities in terms of their objective to raise funds, but they differ significantly. IPOs have a shorter subscription period, typically 3 days, while NFOs last for 10 to 15 days. Their subscription price in an IPO depends on the company's valuation, whereas NFOs offer units at a fixed price of rupees 10. Unlike IPOs, which often provide listing gains, NFOs don't offer such benefits. Moreover, IPOs provide a track record of the company's past performance, offering detailed insights for all retail investors. In contrast, NFOs lack historical performance data, relying solely on strategic and conceptual information. Riskometer. The riskometer highlights the risk level of an NFO based on asset allocation. Funds with high equity exposure have higher risk, while debt and gold funds are relatively safer. Asset allocation limits. Mutual funds set minimum and maximum asset allocation limits in different classes. For example, the Axis Value Fund allocates 80 to 100% in equities, up to 20% in debt, and 10% in REITs. Expense ratio and exit load. Mutual funds disclose the total expense ratio, which reflects management fees. Higher total expense ratios can impact returns. Investors should also check exit load charges applicable if funds are withdrawn before the specified period. When evaluating an NFO, the fund manager's expertise plays a critical role. A skilled fund manager not only builds an effective investment strategy, but also navigates market volatility with discipline and foresight. Their ability to select assets based on deep research and adapt to changing market conditions is key to a fund's success. However, with NFOs, fund managers often lack a track record for that specific scheme. This makes it essential for investors to research the manager's experience in managing similar funds and their past performance. A fund's success often depends on the competence of its manager. Benchmarking is a crucial tool for assessing funds' potential. Every NFO specifies a benchmark index, such as the Nifty 50 or S&P BSE 200, against which its performance will be measured. Comparing the fund's objectives and strategy with its benchmark helps investors understand its risk-return profile. For instance, A large cap NFO benchmarked against the Nifty 50 should aim to outperform it consistently. While historical performance isn't available for NFOs, understanding the benchmark provides insight to expected returns and market positioning. Investors should consider whether the fund's benchmark aligns with their financial goals and risk appetite. NFOs can provide diversification opportunities that may not be available through existing funds. Some NFOs focus on niche themes, such as sector specific funds, ESG, that is environmental, social, governance funds, or international funds. These funds can help investors gain exposure to new asset classes or emerging trends. For example, an NFO targeting artificial intelligence or clean energy sectors might align with investors seeking futuristic themes. However, it's essential to ensure that these funds fit within a well balanced portfolio and don't lead to overexposure in a single sector or region. Diversification should always support broader financial objectives. NFOs provide access to innovative strategies and global themes such as ESG, that is environmental social governance funds. They help retail investors overcome limitations in direct investing, offering professionally managed portfolios. Some NFOs focus on emerging trends or niche sectors, allowing investors to capitalize on opportunities unavailable in traditional funds. Additionally, lock-in periods can encourage disciplined investing by preventing premature withdrawals. Fund managers bring their expertise in managing these schemes, ensuring optimized allocation and better portfolio performance. Recent examples include the Baroda Business Cycle Fund, which aligns investments with economic cycles. NFOs help investors diversify portfolios with minimal initial investments. Despite their benefits, NFOs come with drawbacks. One major disadvantage is the lack of historical performance data, making it difficult to assess their potential. Most NFOs are launched during bull markets, where valuations are already high, potentially limiting future returns. Higher expense ratios compared to established funds can also erode gains. Additionally, investing in new strategies poses risk as there's no guarantee of success. Retail investors may overestimate NFO's potential, especially during market highs. It's crucial to remember that past performance doesn't guarantee the future results, and investments in mutual funds are subject to market risk. NFOs are a compelling investment option but require careful evaluation. Investors should analyze the scheme information document to understand risk, expense ratios, and asset allocation strategies. While NFOs offer innovative opportunities, they lack the proven track record of established funds. Always remember the disclaimer. Mutual fund investments are subject to market risk. Make informed decisions by considering your financial goals, risk tolerance, and investment horizon. I hope this video answered all your questions about NFOs. Don't forget to like, share, and subscribe for more financial insights.
Stack Wealth is a new age investment management company that helps you take your wealth to new heights. Our team consists of experts with 25 plus years of experience managing investments for more than 1 lakh investors. Our team of experts help you curate a personalized mutual fund portfolio based on your goals and risk tolerance. They help you decide your asset allocation. They also help you identify high-performing sectors to help you generate additional returns. And finally, we help you manage and monitor your investments in real time. First, download the StackWealth app from the Play Store or App Store and complete your sign-up by entering your mobile number and email ID. Now you can explore the app, get your personalized mutual fund portfolio, or browse our various investment opportunities. To start investing, you have to complete your KYC. Once your KYC is completed, you can start investing in your personalized mutual fund portfolio or explore our expert curated investment opportunities. If you're not sure where to begin, your dedicated wealth manager will help you. Now you can start an SIP or make a one-time investment. Remember, you can always pause your SIP anytime and edit the SIP amount if you want to increase or decrease it. Finally, you can sit back, relax, because our wealth team will rebalance your portfolio based on shifting market conditions, identify and recommend new investment opportunities, give you monthly portfolio reports so you know exactly how your portfolio is performing. If you found this video helpful, don't forget to hit that like button, subscribe to our channel, and tap the bell icon to stay notified, because we are making finance and investing as simple as possible for everyone. Thank you for watching, and goodbye.